it's scary to think of how cheap the stocks are relative to the historical norms. You do need that greed factor needs to kick in, and the greed factor is probably driven by two things: one, the pricing of the underlying commodity, and two, the valuation of those underlying stocks relative to that commodity. And we have those in place today. I mean, if you look at the broad moves in gold and the broad moves in the cryptocurrencies, in my view, it's the same trade. We need more lithium, we need more nickel, we need more copper to accomplish this longer term strategy. Well, I think it's time to start looking at some of the better lithium plays. I think we're in a sort of bottoming process in terms of the where we are in the cyclically in the economy, um, which by a year from now we'll probably be feeling better, and that'll probably play on the supply demand side for copper and gold and other critical minerals. I mean, if they've got no money and they've got a market cap, small market cap, I don't care how good management is. How are you going to raise money?
All right, Gerry, been a while since you and I last spoke, so this might be sort of a jumbo edition here, if you will, with a couple of interesting topics to cover. Top of mind right now is that whole Save Canadian Mining Initiative thing out there. I haven't looked into it too much, but that is sort of it's based on two pillars as far as I understand it. One of them sort of blames the lackluster performance in mining stocks on short sellers, and the other one blames it on the lack of capital that is domestically invested by pension funds in Canada. And both pillars sort of suggest that the industry is great, but we need more regulations to save it, pretty much, which doesn't sit well with me in almost any case. But again, maybe I'm being naive and I haven't looked into it too much. So I guess as someone who manages capital professionally in this sector, what do you make of that whole thing?
Well, there's two parts to this. First of all, over the last many years, call it 10 years or so, the regulatory apparatus has grown and grown and grown to the point where, in my view, I think the investment industry is being overregulated.
Hmm.
Um, to the and the major casualty of regulations, these regulations, has been the crippling of the ability to raise risk capital, which the Canadian equity markets, particularly the venture exchange, is particularly known for. And it's not just mining entities; it's any higher risk capital, which traditionally and historically, the Canadian market's done a great job of raising early stage equity money.
Hmm.
Um, and it's understandable that the retail infrastructure, institutional investors' response to the regulation of their activity has shied them away from risk capital, investing in risk capital. It's not it, it's probably not worth their while to go through the regulatory gauntlet
Hmm.
to approve a particular high risk investment for a retail investor, for example. So that's the one side of it that I think is been working against the smaller cap, higher risk market for the past number of years. The latter one, which is so contradictory, my mind explodes when I think about this. On the one hand, the regulators and compliance organizations have been forcing this regulation on the investment industry and highly regulating it. On the other hand, excuse me, on the other hand, they've taken off the regulations and actually expanded and opened regulations for naked shorting.
Hmm.
They eliminated the uptick rule, and then that simply opened up the ability for entities domestically and more importantly offshore to do whatever the hell they want in terms of shorting um, particularly junior, smaller equities in the market. Um, so, excuse my language, but it sounds like a bit of sucking and blowing at the same time. On the one hand, creating huge regulatory infrastructure, which negates the potential for having capital to go into the higher risk areas of the market. And on the other hand, allowing this naked shorting situation, which they are fully responsible for managing, to occur, which causes in well, I have chose my words carefully here. I don't want to be sued, but there's it's it's just improper to allow people to naked short like the system is allowing to do now. So it's, to me, mind-boggling that you could have those two opposite issues created by the regulatory authorities. It just blows my mind, quite frankly. And therefore, in the middle of that, the mining sector, for example, is having trouble raising. No wonder it's having trouble raising money. I mean, when they do raise money, the naked shorts come in and play the game, which destroys the underlying equity base of these companies. So it's a challenging environment as a public company to raise money in the higher risk areas of the market.
I again, I don't completely understand that whole thing, and I'm sure some of it absolutely happens. But is it really to the degree where every lackluster performance, to use words that's bigger than my brain here, is naked short selling really the reason for every, not well performing stock? Because I mean, it sounds bad, but if a company has been drilling for 15 years, it's got 500 million shares outstanding and a $1 million market cap, then is it really naked short selling destroying the company, or is it just a bad business, or maybe a bad patch of land that should never have been drilled in the first place?
I'm not. I don't want to sound Pollyanna about this. It is the cause of all the issues for the industry. That's not what I'm saying.
Hmm.
But it is a challenge. The combination of those two things I mentioned is the challenge. When you've got highly regulated situation on the one hand, and then a highly unregulated trading activity on the other hand,
Hmm.
it makes no sense. And let me just explain to you exactly the way this works. If you're like the short stocks, the one thing you wait for is a great announcement out of a junior mining company, for example. They've announced some great holes. The stock runs 10, 15%. They will short that heavily, okay, on that up news. That's their opportunity to short. And then all of a sudden there's weight on the stock and everyone starts asking questions. Well, what's going on? What's wrong with the stock? This is good news, right? Um, it's at a minimum, it creates challenges even for a good company that's doing good things and creating good results. It's an uphill battle every single time, especially when they announce good news, because that opens the door for the shorts to come in and play. So it's just like an uneven playing field, if you will.
Hmm. Well, but that hasn't stopped the snow lines of this world. And it's often brought up that the availability of capital hasn't really moved over the last 10 years. But what has moved, and it's moved up significantly, is the number of listed issuers, right? So same pool of capital, larger number of demand placed on it, which makes me think, who is to blame here? Because the vast majority of assets and companies I look at, my uneducated and unexperienced opinion, don't quite deserve the access to any capital of sorts. While again, the good discoveries like the Snowlines, Rupert, whatever it might be, they still have access to capital just fine. So yeah, go ahead. You want
That
to say something?
Yeah, that's fair. That's a fair comment. However, if you look at how depressed the valuations are, pick a stock, any stock you want, any money stock you want. You look at the disparity between the historical valuation ranges of mining stocks, particularly the junior mining stocks in the past, or ones that are developing an asset. Um, And today, it's scary to think of how cheap the stocks are relative to the historical norms uh, of the past. So, and that reflects um, the issue, I think, because if you look at copper is still a pretty damn good hefty price here compared to historical terms. Gold's in new all-time highs.
Hmm.
You look at the relative valuation of the underlying stocks, particularly the explorers and junior developing stocks. It's the level of valuation is unprecedented. The spread, if you will, between new highs on gold and the valuation of gold stocks today, for example. So it there's no doubt about it. It is having an impact. About those two issues I mentioned is having an impact on this extreme valuation spread between the underlying commodities and the valuation of these stocks. And
What do
which leads to challenges, sorry, which just leads to challenges as to how an industry that is highly dependent on capital to move the uh, projects forward is being seriously damaged in my view.
and how we move forward, I suppose again, I'm talking out of my depth here, but how we move forward is by doing a better job, right? Just consolidating the industry, not having 3,000 issuers or as many as we might have, spending less on G&A, wasting less money in the ground drilling holes that we know are going to come back bad, but we drill them just so we can have a lifestyle nonetheless.
No, I don't disagree with that at all.
Hmm.
And that will be one of the remedies, I'm sure, and one of the results. And that's front and center, I believe, immediately right now. I think the go forward from here for the next year or two is if you're a company like you just described, you're not going to find funding.
Yeah.
Absolutely. So M&A activity is picking up
Hmm.
tremendously and will continue to accelerate. And that's not a bad thing. I'm not suggesting it is. It's not a bad thing. But even for these companies that can consolidate and create M&A, a creative M&A activity, it's still a challenge. This
Hmm.
is what I described. It's still a challenge to get a fair valuation for and raise capital in an effective way to move projects forward.
That's got to be one of my favorite words, accretive. Companies would use it for all sorts of reasons. I understand how you're using it, so that's fine. I do want to talk about M&A later on, by the way.
Mhm.
And sort of what I've been pondering on a little bit is the industry really starved for capital as a whole, or are we just more reluctant to give capital to bad companies? Because one, we have more access to information today than 20 years ago. It's easier to open setterplus.ca, read everything, so there's a lot of content around how do you recognize shenanigans, including on this channel, many other good videos out there that help people pay close attention to those shenanigans. So that's one thing. We have more access to information, but we also, again, we just have a whole lot more issuers to pick from. Sometimes company like I come across companies that, you know, I don't want to exaggerate, but 10 companies that have the same management or the same boards, and they're pretty much doing the same thing, only living on 10 different G&A. So that type of thing. So those two reasons are basically what I've been able to identify. Do you think those are among the bigger reasons?
Well, look, let's just step back for a second. Um, if you look at um, the demand side for copper,
Yeah.
nickel, base metals, the big push for a greener economy, um, and you do the math and do the look at that strategically and say, how are we going to get there? Well, we need to find not only a lot more copper at a reasonable price, but we probably have to find it in a jurisdiction that is um, accessible, that is fundable. Okay, and those areas of the world are becoming smaller because a lot of the geopolitical issues that are going on in the world today. So if you look at the environmental issues around developing a mine, they're escalating. if you look at the indigenous rights of the indigenous people in that area, their rights have to be considered. So the process of developing supply is becoming extremely challenged. And that when you challenge it like that, it means one thing. You need more time and you need more capital to surmount these challenges that are, have escalated and grown over the last 10 or 15 years. And so it's not surprising when you look at copper, for example, and you look at the average grade of copper that's being mined today. It's been a straight 45-degree decline for 20 years, and it's continuing. So finding those rich, high production mines is extremely challenging today compared to 15, 20 years ago. And put that on top of the fact that it's now even more challenging to raise money, which takes a bit more and a bit more time. That's when you put those two things together, then that creates issues in terms of how are we going to create the supply to meet the demand as we go down the road. That is a real economic issue for the industry. How are we going to surmount both of these challenges?
Well, I don't know. That's why I brought you here to help me solve
Yeah.
them.
Well, we need help on all fronts. Look, it takes 12, 15 years, maybe extended longer now because of some of these issues I just raised, to take a mine from discovery to production.
Mm.
So and I don't think all the parties involved, the government, industry, um, all the interested parties can have to sit down and realize this is the challenge. If it's going to take that long, are we going to run into a problem where we're running out of copper?
Right.
Okay. And when we need it most.
Right.
Uh, we had just a few years ago, copper inventories were very, very low. They packed a bit up here with the economy slowing and so on. So that's helped, but that's not the solution. We still have a challenge supply demand issues for the mining industry. And the challenges of raising capital and the timeline of surmounting some of these issues I just raised are growing. So what we need is help on all fronts to
Mm.
try and surmount these challenges.
And who's really going to help? That's something I've been thinking about since PDAX and you and I met, by the way. And I attended a panel, I don't know if you did, where some data was sort of shown saying that about 80% of the money for juniors, specifically for the people looking for those reserves, comes from just 12,000 investors. So 12,000 investors subscribing to flow through shares. That was the main thing, right? But those two-thirds of those people are 80 years or older of age. And someone asked whether the retail age is over, as
Right.
in who's going to help us if the retail age is over? That's sort of what I've been thinking about. What do you make of all this?
Well, that's just the reality of where we're at, in that we've lost an audience, as we talked about earlier, the retail audience, the institutional audience, and investors, for some of the reasons I mentioned, and that's a big challenge for us all here. But my simple way of looking at it is price can correct a lot of problems, and perhaps what we need is $6, $7 copper, uh, 3,000 gold, right? Then all of a sudden, those the younger generation, the institutions, the retail market will all start taking a look, saying, "Oh my goodness, look at the potential returns you can make in the copper and gold industry and other metals industries."
Mm.
So I think that's at the end of the day, the capital markets and pricing usually responds and creates a solution where the authorities and regulators and markets sort of sit in a malaise until that happens.
Mm.
That may be the case, but in terms of the junior mining market, I think you're going to see tremendous consolidation here
Mm.
in the next little while, and that's not all bad. That's probably good. Um, Create critical mass, of two or three projects that make sense putting together. I think that makes all sense in the world, and that in combination with some higher prices in commodities, and then all of a sudden you'll have an interest in from investors, and perhaps on the other side of that, you'll have a much improved, um, higher quality asset base with more qualified management teams manage it.
Mm.
That's the other thing that might help institutional and retail investor to come back to the market.
Well, you mentioned retail investor coming back into the market. During that same talk, I'm reminded of it was somewhere from Lundin Mining. It must have been the chairman or someone like that. Lundin Mining, obviously one of the most respected groups in our space, and for good reason too. But he said that it's not retail that we should be depending on or working around. And there's also I also read an article in the Northern Miner where Pierre Lassonde was talking about people who would back in the day, have more discretionary income and therefore they'd be able to more or less sort of gamble on this space. But then that raises the question for me, like, is do you want gambling 18-year-olds in this space, or do you want stable capital who's going to remain sort of on a lower left to upper right corner type of basis? And so I suppose that's the point that Lundin's chairman also made here, that we don't necessarily need retail. We need more institutional capital, more serious capital, basically, in this space. What do you make of that?
Well, I don't disagree with that at all.
Mm.
But the reality is that institutional investors are just like retail investors. I mean, it's fear and greed, right?
Mhm.
And when you're investing in a higher risk area of the market, um, you've got to have more greed to get people motivated into the market, and than you would otherwise, right? And if it's a nice stable business you're investing in, I mean, you can rationalize why institutions and retail investors can rationalize why they invest in those things. But when it's higher risk, you do need that greed factor needs to kick in, and the greed factor is probably driven by two things. One, the pricing of the underlying commodity, and two, the valuation of those underlying stocks relative to that commodity. And we have those in place today. We have extremely low valuations, and I would say not extremely high, but higher commodity prices, which makes that, rationale makes sense that you should be investing in the area.
Mm.
But we just haven't had the greed factor high enough to motivate institutions and retail investors in any major way in yet. I think it'll come, and I think it'll probably come with higher, as I just said, higher copper and gold prices, so that people can feel that there's pretty rich reward potential there now. So
Yeah.
that'll be what I think kick us into gear at some point in time. Don't ask me when.
Mm. I want to ask you when, though. That's why I brought you here. Pull up the crystal globe and tell me. But it's not like greed is not existent. It's inexistent in this specific venture capital market, but it's not in crypto. I mean, something else that I've been trying to track more closely. It's also still related to whether or not retail will ever come back into this space. But that's the existence of crypto overall, right? Just late last week, there was news about Bitcoin having surpassed gold in investor portfolios, according to JP Morgan, or an analyst at JP Morgan, something like that. And it was big, right? It was by almost 4 times more exposure to crypto than gold.
Mhm.
Um, so how do you basically move, and when you see like what Bitcoin has done and how much more attractive it is to young people, how do you move them in this space when they can direct their greed in something like crypto?
Well, if you look at the movements of Bitcoin or crypto in general and gold,
Mm.
they are moving together. If you look at the broad moves in them, they and they the motivation there is away from fiat currency. I mean, there's no doubt about that. I mean, if you look at the broad moves in gold and the broad moves in the cryptocurrencies, in my view, it's the same trade. Okay, different nature of the trade, but it's the same trade. Um, and what's the popularization of crypto is understandable in the technology generation. Uh, that they would be attracted to that first. I fully understand that. Um, but I don't think I don't distinguish between them two, quite frankly, because I think they're both the same trade.
How do you mean in terms of what drive the emotions that drive them, or like what do you mean?
Yes, I think as I said, I think it's a if you look, for example, look at gold. Uh, what are the major central banks doing? They're buying gold.
Hmm.
Now, a lot of that's geopolitically driven by China and elsewhere, but it's a move away from fiat currencies, particularly the U.S. dollar, to own gold. All right. Well, the retail investors or investors in general are doing the same thing with crypto and gold. So it's just that um, there'll be yin and yangs. One will outrun the other, and the other will catch up. But the trends to them is if you go look at the history of them is well as long as crypto's been around, are very similar.
Hmm.
And so I don't think there's any I from a fundamental standpoint, I don't think there's any pick your poison, whether you buy gold or buy crypto or buy a bit of both for that particular reason. Just go, away from fiat currencies. No,
Hmm.
do it however you want, but it's the same trade in my view.
Oh, okay. So you basically mean that the broader theme behind it is sort of this,
Same thing.
macroeconomic troubles driving the demand for more safe havens. Basically.
Geopolitical issues in the world have escalated, and people are looking for alternatives to fiat currency.
Okay.
That's a simple trade for both of them, I think.
And so you think that's going to move the commodity price up, specifically gold, and you think that's what's going to kick off M&A, or how do you see that?
Oh, well, the fact of the matter is gold's in new all-time highs.
Hmm.
It is what it is. And yes, um will it help um in M&A and transactions? Absolutely. If you can build confidence that the gold's going to hold in new highs and go higher, that's a different mindset for M&A activity for general investing in the sector. So I think it changes the tune significantly. And I think copper's not too far behind.
Hmm. When you talk about M&A, though, what I'm thinking about is the M&A in crypto too, which is much larger. I mean, what's the largest deal we've ever done is Newmont buying Newcrest, right? $17 billion. Not a small deal,
Mhm.
but I mean, in tech and crypto, the deals that they would pretty much laugh at that deal. So how do you kick off excitement when everything that there is to be M&A'd, if you will, is relatively small?
What are you referring to on the crypto side or
Well,
uh,
the
the
M&A
price part?
deals that could happen moving forward here in the gold space, they're relatively small, right? We saw one large deal with
Mhm.
Newmont and Newcrest, but in the grand scheme of things, or relative to crypto and tech, it's still relatively small, that $17 billion.
Oh, listen. This is it's a good point you just raised.
Hmm.
Look, the gold market is small. It's small potatoes compared to just about any other form of investing. It's a very small market in and of itself. Gold itself, let's for example. The gold mining sector is a very small market. Okay, and you're making my point here that if you get a movement uh, like we've had in gold, which sustains itself and starts moving higher, and as typically happens, greed kicks in and says, "Oh my goodness, look at the price of gold. Haven't thought about that."
Hmm.
And you look at the market. Oh, how do I participate? And you look at the size of that market. It's small. And so it doesn't take a lot of incremental buying to come into the gold sector in terms of stocks or to gold itself to move that market.
Hmm.
And so, and what's going to be very interesting regarding this short selling, naked short selling issue, and I haven't sort of thought this through yet, but what happens when the market really starts moving up? Do we get the opposite?
That's when we're going to have proof of whether really it was that big of an issue, right? Because if the market all of a sudden gaps up massively, then yes, I'm not sure how that would work in terms of what happens to the banks carrying those things if they really are again. So that's yeah, that's it's a good point that you raised something to think about. I'll write it down. Um, but do you have a list of what M&A could have happened? Because again, I bring up Newmont Newcrest and like the next bigger thing that could happen is Newmont Barrick. But is that happening? Not if you listen to Mark Bristol. So what I mean, do you have a list of potential big M&A?
Look, M&A activity in the big cap gold or copper companies,
Hmm.
it's just moving to debt shares, okay? That doesn't change anything in terms of supply demand. It doesn't. No effect at all. You're just moving ownership of this asset from here to there or combined to there. What is probably more important for M&A activity for impact on creating supply is the junior developers, i.e., a company that's established a resource, which looks credible and expandable and buildable, um, and puts that together with another group that's got another asset, which creates a more critical mass. Um, and then the big, because remember, the big mining companies don't discover assets.
Hmm.
They build assets after they've been discovered. Okay. That's their business. They're not in the high risk capital business.
Hmm.
So they'll wait for junior and intermediate mining companies to spend the money, the time, the hard work, create the resource that they can uh, take on and move to production. So that's so the food chain is the big guys wait for the little guys, and where what's happened with this market is that the smaller junior explorers and developers are being hampered by the capital markets to create capital to put into the ground to create the assets that the big companies will buy.
Hmm.
There's where the linkage is broken. Okay. Yeah, the big guys can merge this, that, and do whatever they want at their side, but it doesn't move the needle on production.
Yeah.
What moves the needle is the ability of them to go and purchase a company that's brought an asset along to the point where they can take hold of it and develop it.
Hmm.
That's what the industry needs. And that's the broken part of this chain, if you will, is that stage of it. And that's where these capital markets in this condition are creating huge challenges for the industry that are going to create the assets for the future demand.
You bring a very good point because do we really have that many mine building companies left? I mean, Newmont seems to prefer buying a ready mine. I mean, so sure, the B2 builds mines, like Nico Eagle does, Endeavor does, the Lundin are on their way, right? So, but not many others are necessarily looking to build mines at scale. A lot of them are like the bigger boys again are looking to buy mines. So yeah, again, I'm just wondering who does the buying of these, say, PEA or PFS projects.
Well, it is the bigger companies that do that. What I'm describing to you is that the value creation, it's the Lassonde cycle, right? And
Hmm.
Pierre did a great job of defining that many years ago. Is the discovery phase is huge value creation on discovering an asset. Then you go into the lull of, oh my goodness, we need a ton of money to develop the asset. And then you go into production and there's another cycle to make money on production. The senior mining companies, they don't play that first cycle. Okay. They're about middle of the down cycle after the discovery when it's been developed to the point where they can put capital to work and create and build a mine. Okay. So they're two separate cycles. The challenge we have with these market conditions is that first cycle of discovery. Having the capital to create the discovery value stage is broken right now. quite frankly, and very rare. It's not to say it's not happening. It is happening, but it's getting more difficult because of the market conditions to create the capital that goes into the ground that has those major discoveries um, that eventually can be built into mines.
Why I'm asking about specific names is because as you said that, I immediately thought of Rupert Resources offering to buy Orion in Finland. And so that's
Mhm.
making me think whether we should look for opportunities, decent exploration projects that are well advanced maybe, that are specifically close to mine builders as opposed to close to the mine buyers, if I'm making any sense here.
Well, look, um, the mining industry is a global industry, um, and you got to have the right geology that can host a mine. You have to have the right uh, political structure to allow the production and development and production of a mine. You need the logistics of transportation around where it is. There's many issues around that um, are complicated in this world we live in today. But so I think you're going to see more and more M&A activity globally uh, around this. There are many groups um, in each of those segments. In the development segment, for example, and in the Lundin family is a good example of that. Um, that are skilled at doing what they do. Um, the challenge, and even for them to find projects that some of the juniors have discovered, they are ready buyers of good projects that have gone through the discovery phase, for example, and take it through the early development stage, and eventually get sold off to a major. I mean, there's but this environment is challenging for that process. Very challenging.
Is that true for every metal basically, or for every commodity, or is this gold specifically that you're talking about?
It is every commodity. Now look at the nickel market right now. I mean, the nickel market is, it ebbs and flows radically. The pricing is now on a downturn, and there's a lot of good nickel projects, but they get shunned when the market price gets hammered like this, the nickel price. Um, it's a challenging environment to manage if you're trying to manage or develop a nickel property, even in a very um, well-established area uh, like Ontario, for example, right? And Sudbury, one of the greatest, still good mines in Sudbury, and there's several up there that are struggling right now
Mm.
to get developed and into a resource. So it is a challenging environment. It does require long-term capital, and some of that capital I think is coming from um, areas that private equity, high net worth families that see and smell the opportunity of these conditions. Okay, the early stage type investors, and the retail and institutional markets will come along once it's more well recognized. The trend is more well recognized, and the pricing is more lucrative.
Mm.
So I think there's a great upside potential here. I don't mean to be Pollyanna and have steep negativity about this. Um, I've been a long years in the markets, and these kind of conditions are the fertile conditions for a bull market. No doubt about it. It's sometimes getting there is somewhat challenging, but these are the conditions and so smart money, a lot of the long-term smart money is starting to assemble itself and put money to work.
Mm. You're setting me up again to ask you about the when of it all. But again, you're not gonna want to answer that. But it's I mean, who knows, right?
Yep.
What you mentioned there about nickel though also brings a point of critical minerals, right? And sometimes you would hear, I don't even know if I should take this seriously or not, but you'd see points written in papers like on Twitter or whatever saying that critical minerals are the iron ore of this cycle, be it nickel or lithium. You see it many times said it differently. When I say of this cycle, iron ore, I'm referring to the build out of China, if you will, where iron ore did really well for an extended period of time, although it was a secular bull market, as they call it. So it had its ups and downs. Would you agree? Do you think critical minerals are the iron ore of this cycle?
Look, there is a growing consensus in government, uh, in the environmental world, that we're on a path to improve the environment. And part of that is critical minerals that are going to reduce emissions
Mm,
to the overall economy. So we're on a path for that now. I mean, government initiatives are in place and growing to support that. There's geopolitical reasons around supporting that. So that trend is in place. So there's no doubt about it. We are headed in that direction.
mm,
It's not going to change the ups and downs. Look at lithium here. Had a really nice run and then collapsed. You're not going to avoid the ebbs and flows of the ups and downs of the nickel price or lithium or graphite or any of these other commodities. They're going to go through, especially when they get initiatives like this underway and people get all really excited about the upside. And lithium was it, a year and a half ago, 2 years ago, and it got overexcited, and now it's come down to earth. But it doesn't change the trend that we're on.
mm,
Okay. And you have to manage that as an investor, and as an industry, they have to manage that. You're seeing a lot of lithium companies now just pulling back, okay, because of the lithium price. And maybe some of those projects that at the, highs of 2 years ago, everyone thought, oh, isn't this great? Now they're having second thoughts as to, well, maybe it's not such a good project with the prices down here. So you're going to go through those ebbs and flows as we go. But the trend is, we know where the trend is. We need more lithium. We need more nickel. We need more copper to accomplish this longer term strategy, and which is in place. So, and that is why, if you look at all the supply demand, long term supply demand picture here, for copper or whatever it is, it's strong. So the question is, how do we navigate this challenging up and down process in the market to create enough product to meet that objective of a greener economy?
mm. Rick Roll answers to that is that you buy when everything is hated, right? You buy when you don't feel like buying it because there's that fear and greed and the whole thing all over again. Which brings me to another point or another topic that I wanted to talk about here today that I've got on my list, and that's diamonds. Because diamonds they went through being hated. They're just now forgotten. Like nobody hates them because nobody ever thinks about them anymore. It seems like it. And mines are closing, and I don't ever see it mentioned anywhere. So I don't know anything about it. But have you ever made any money in diamonds?
Have in the past, invested in the diamond sector. It's challenging. It's challenging from the standpoint that it's not like a base metal. It's not like the greening of the economy is going to affect that. Um, the discovery and development of a diamondiferous pipe has its serious challenges. I mean, geologically and else otherwise, and then the market is so it's something that I don't think about too much right now. I think there's easier places to play, and what we just previously talked about, the critical minerals, I think is far more interesting right now. And yeah, and yes, right. I believe with Rick Rule. I mean, look at lithium prices. It just got hammered here. Well, I think it's time to start looking at some of the better lithium plays uh, at this time,
Mm,
right? that have a good project that they've got off the ground and looks interesting, and even at these prices looks reasonably attractive. And if prices improve, which they probably will at some point, it'll look more attractive. So I'd rather focus on the critical minerals than on diamonds. And in the critical minerals area, I mean, the rare earths, that's like the diamonds diamond story. The rare earth market is a challenging market, because it's the processing of rare earths is so capital intensive and difficult. We need them. There's no doubt about it. But that needs a lot of capital. And it's not the finding the metals, it's the processing and development of them that's really the challenge in that market. So it's much more complicated than copper or lithium or nickel. So I like in this market environment, this challenging market environment, I like the simpler stories, if you will.
Mm. On a company basis too, or is this just a macro that you're talking about here?
Just the macro. I mean, I'd rather be looking at gold, copper, nickel, lithium, graphite. Um, the understanding of the opportunity, I think, is a simpler story than rare earths or diamonds.
Right. That's a very fair point. And copper is an interesting one too, especially after what happened last week, right? Where China's biggest copper smelters sort of met and decided to stop losing money, I guess. I think my friends and I might have to go to a similar meeting as well. But so the Chinese essentially said they'll cut money losing production as far as needed to stop losing money on copper, basically, which of course it pushed the copper price up a little bit.
Mhm.
So as the saying goes, as China goes, so this copper still seems to ring true here. But I mean, copper doesn't feel contrarian, if you will, and this is gut feeling simply that I'm talking about here. Yeah, why are you bringing that up?
Well, I think I just look at the long-term supply demand, um, and the lack of meaningful discoveries in the last few years, the lack of investment to find meaningful discoveries in the last 10, 15 years. This is a challenging environment, and without further discoveries, that supply demand condition is going to remain tight. So you're going to see China and other players adjust like they've just had to adjust, and say, "Wow, boy, how are we going to manage this?" Right? I like copper. I think it's a very simple story to understand. And if you can find a good copper asset with reasonably good grade and a good jurisdiction, reasonable infrastructure in the area,
Mm.
check, check, check. Uh, that would be pretty attractive, I think, going forward.
And again, you go back to the capital markets here, right? To figure out when might be a good time to initiate a position or think about initiating a position, because the macro is still at play, as in the macroeconomics are still at play, because there could be mishaps, right? I mean, China could sort of like OPEC try to cut production in the face of lower demand, but how long does that lower demand continue? So how closely do you follow macroeconomic these days?
Look, the the economic cycle is alive and well. It ebbs and flows. We've seen a peak in U.S. 10-year yields as the tightening occurred. Looks like we're on the other side of that mountain. Um, should we see more easing? I think so. Um, that'll dictate how the economic cycle plays out here, um, in the next year or two. Um, but and it'll have another upturn, and that when that upturn happens, you'll probably see higher, firmer pricing in commodities, particularly copper and other critical minerals, as we advance this longer term environmental program. Um, so I just think we're in an environment here with the valuations where they are. I don't think there's a lot of downside risk. On the other hand, I think the risk is time. How long is it going to take to sort out some of the M&A activity that's probably going to happen here in the next few months? But if you look at when M&A activity or when companies go bankrupt, and there will be some of these juniors will just have to roll over and die. Okay. Um, that typically happens in a recovery.
Yeah.
If you look when bankruptcies happen, they don't happen in a downturn. They happen after the downturns happen and you're actually in a recovery, and those ones that couldn't make it to the recovery.
Right.
Right. And so I think we're in a sort of bottoming process in terms of where we are in the cyclically in the economy, um, which by a year from now we'll probably be feeling better, and that'll probably play on the supply demand side for copper and gold and other critical minerals.
Okay. Interesting. Because when I open up my sort of analytics on YouTube and I go and see what the audience of this channel, what other videos they watch, you open them up and it's like it, the end game is unavoidable. The
Mhm.
charts are pointing to war. The economic crash is going to be worse than 1929. We've hit a fiscal and monetary dead end.
Yeah.
Um, Stuff like that, right? And so that doesn't, none of these headlines sound bullish copper to me, basically.
When
Um, yeah,
that's so bearish, it's bullish, right? If I could say that.
yeah.
No, this is what you should expect to see.
Hmm,
If you go back and look at cycles and you look at the bottom, what do you hear?
hmm,
Just exactly what you've just said, right? If this is the top, I know what you'd be reading too. Oh, look, I've had this stock. I've made a ton of money. It's going higher.
hmm.
Oh, look at this. Everything's blue sky.
Yeah,
We're going to the moon
hmm,
after a long move, right?
yeah. Well,
It's
everything is
psychology.
red sky right now. If
That's just
I,
human nature and psychology is never changes. Okay.
hmm.
So give me more bearish news and I'll get more bullish. Please.
Fair point. That's something that last time we also talked about it. You pretty much said the same thing as with the metals. Like if you keep coming up with bearish news for the metals, it gets more and more bullish because that capital has to come back and on what we just talked about basically. So,
It tightens the gearing, right?
hmm, yeah,
When you get this bearishness, right? And the less money that you put into the market, the tighter it gets, the more it gets wound up, the
hmm,
tighter it gets, and the more it gets wound up until finally, probably copper prices pop $7. Oh
yeah,
my God, how could this be?
hmm,
Well, look at what's been going on, right? Everyone's been bearish. No one's putting money into the ground.
yeah.
But what do you think is going to happen? It's going to decline because there's no more copper? No, it's going to higher because there's no more copper.
Well, but
So
the meantime is also important because a lot of these things were true last year, maybe too. But then a lot of the juniors I talked to, they are down 50%. So it was like catching a falling knife and you kind of missed that, right? And the knife fell right into your foot. Um, so how do you handle the meantime? Like, how would you handle this if you're just starting out right now yourself? Do you wait? Do you buy a little bit? Like, how do you deal with the situation?
well, I wouldn't. Uh, First of all, there's three things. One, management. Okay, who are you investing in? That's who you're investing in is management, who they are, reputation, their skills, blah blah blah. What's their balance sheet look like? I mean, if they've got no money and they've got a market cap, small market cap, I don't care how good management is. How are you going to raise money? How are they going to do it with their own bootstraps? They're probably not.
Hmm,
So they got to find a partner to merge with. And then thirdly, the asset. Okay. And if it's a good asset, they'll probably find a partner to merge with, right? But in
yeah,
this market environment, in this time, even though you've got a good management team, a good asset, you've got no money, you've got no ability to raise money. Uh, and in this condition, in this market condition today. So, but if you are a good management team with a good asset, highly likely you'll be able to find a solution in terms of M&A.
Mm.
So that's typically, I think that's where we're at right now with a lot of these companies. So then there's the ones that don't have a good management team, don't have a good asset, and have no money. Those are the ones that'll be swept out with the trash, right?
Mm.
And that's fine too. And then that's all part of the process, right?
Yeah.
Clearing the decks. So
You- You're making the case for the great reset in junior mining stocks.
absolutely.
It's true.
Absolutely.
The
Yeah.
fourth turning
So
in junior
when
mining
you ask me the
stocks.
question, who should look at, go and look at the better management teams with good assets that have money. Okay. Because those groups will be able to go and take advantage of M&A activity to acquire cheap assets
Mm.
and put them together. So look at the ones that are um, financially smart, know how to do deals, know how to run a company, have good assets, have capital. They are the ones that can pick and choose, opportunities for M&A.
Mm. Yeah. It's interesting when we talked about China, I just got a sort of a message on my computer of something that maybe we should have also talked about. And it is kind of a switch of a topic here, but I know you don't have too long of time. Uh, but it is about, it kind of ties everything that we talked about here together because it's China, it's gold, and it's young people too. Um, but apparently there's a sort of a new trend within Chinese Gen Z, so younger people. Um, there's these gold beans, if you will, and so they're very popular with Gen Z. They cost about $76 each, and apparently that's what's attracting them into the space. Um, so that's I don't know. It's something like kind of
Hmm.
funny to just think about. Have you seen this?
No, what is it? Like it's a way of buying gold retail. Is that?
Yeah, pretty much, but it's just kind of a quirky way, which makes me think about what's basically a marketing gimmick behind gold, as far as I understand it.
Hmm.
So. Yeah. Interesting. What else have we not talked about? We didn't talk about Japan. Japan is trying to potentially end the negative interest rates. There's a lot of chatter around that within the gold community. You seen that? You thought about that?
I haven't thought much about that. I mean, but I think the big thing on gold is the central bank buying that's been going on for a while now,
Hmm.
and probably is going to continue. Um, but what I think about is uh, what happens when the retail and institutional investor starts buying some gold on top of the central bank buying. I think that's why we're going to see a lot higher gold prices.
Hmm.
It wouldn't take much. It's a small market.
I guess we've seen a couple of those gimmicks, like what Costco was selling, those little gold bars. They sold out. Now these beans in China, apparently they're also selling out. Was trying to look into it right here. So it seems like there is demand, but maybe like something needs to make it more exciting, if you will.
Well, look, I think all that's reflecting is the fact that gold's in new all-time highs.
Mm,
Okay. Because look, when gold hits into new all-time highs, the marketing machines get going. And
mm,
guys say, hey, we can parse these little pieces of gold into something to sell.
right.
So, but that's all helpful in terms of expanding the interest in gold.
Mm.
But I don't think it's not going to have any impact on the gold price in one way or the other, I don't think, other than increasing the attention to gold.
Yeah, exactly. And that could in and of itself be the thing that changes it, right? Could, of course, the being
Could
the
be the beginning. Yes, and it would make sense.
hmm.
Yeah.
Jerry, you and I have been talking for like 6 months or something like that. Oh, no, actually, it's been a whole lot longer. Time flies. It's
Yes.
been longer. It's been maybe over a year, actually. A year or 6 months.
For a
Anyways,
year.
we've been talking
Yeah.
for a while. You've stayed sort of bullish on the metals. They've performed relatively well. What would it take for you to turn bearish? Like, what kind of news would we have to talk about for you to say, okay, the next couple of years not looking too good?
Um, Well, at these valuation levels, I don't know how I could do that. Uh, one, uh, two, it wouldn't be turn bearish. It would be, oh, we got to go another year of pain here. Uh, right? Is the way I would see it. We've seen all the bearish scenarios play out here. And from a valuation standpoint, relative to the supply demand for the underlying commodities, I don't know how much further you can stretch this. It's stretched beyond historical ranges. So uh, if I was to get bearish, it would have to be, oh, something's happened that's going to delay the eventual recovery in a lot of these base metal commodities. I
Mm.
don't see that, but because in fact, I see quite the opposite. I see conditions like the announcement out of China coming into play that says, okay, the market's going to tighten up here. And once it tighten up, the prices will go. And the commodity prices will lead us out of here. I'm
Mm.
convinced of that. Whether we have to delay it another year or no, that may be the risk. So the risk is time, not magnitude for me right now.
That's a very good note to end it on. I don't want to keep you all day, but what else has caught your attention since we last spoke about a month or so ago?
Well, the big focus that I'm looking at right now is M&A. I say who is going to um, who's in position to do a lot of accretive M&A activity, and who are the jockeys, and who are the ones that are going to get swallowed up into the M&A.
Mm.
Um, that's I think the investment theme I'd look for here in
Mm.
the next few months, and that will build a case for an ultimate bull market.